Hey YouTube, this is Zach with Achilles Financial, and today we're going to be looking at gold. And one of the reasons I want to highlight this is because if you look at the 1 year performance, we have seen a huge drop in the price of gold over the past week or so, and a lot of that is associated with information relating to the inflation data as well as the Fed rate hike conversation that happened this past week. One of the reasons that this is coming to the forefront is actually based off the following. As you can see here in the video, we've got the Discord up and running. This is linked down in the description below. And Jay Trades, who's a very active member in the Discord, was asking about gold. And I highlighted the information that we see here, and it's been cool to watch this. And so one of the things that we want to do is actually look at some of the stocks in the gold industry and what we're seeing right now and ask ourselves, is now a good time to buy? So if you want to have these type of conversations, feel free to check out the Discord. A lot of members in there now. We're closing in on 200, and there's a lot of good conversation there. So let's actually talk about gold and the potential we've got there for it. So what I have here on the screen is the SPDR gold shares. This is a fund that tracks the price of gold, and you can see a lot of this information here. And the first thing that I'll say about any form of gold investment is the fact that I don't believe that this is what should be making up the core of any investment, but rather precious metals are a great way to have some of that inflation hedge as a part of your portfolio. Especially, in my opinion, I really like a lot of the miners because generally speaking, they have inventory, and whether that's gold, silver, or any other precious metals, it gives them the capability to continuously have a price advantage if the price goes up, because they already have that inventory that they can begin selling at a higher price. The other great thing about a miner is, generally speaking, they're going to pay a dividend. And you can see right here on the prospectus, this goes into more detail, but the dividend yield is no regular dividend associated with the gold shares. And this is really just tracking the price of gold. And you can see that it actually topped out last year during, again, the initial crisis associated with the pandemic. So some of the things that I'll just highlight, if we're looking at the price of gold over the past few years, or really just the past year, it went up quite high compared to what we've seen historically. This is the 3-year chart. And again, anytime that you're dealing with the pandemic, you're going to see kind of this flight and return to gold and other precious metals. So this begs the question of, do we want to go into commodities if we believe that the fact that the dollar today is doing very well, commodities are dropping, but do we think that commodities is the move? And I think that there's a lot of value associated with it when we're looking at commodities in general, just because generally speaking, when we're looking at this and we're trying to decide what we want to be investing in, some of the information is the dollar going up? And if the dollar is going up right now, that means that the dollar is strong and commodity prices decline. If we believe that inflation is going up, then generally speaking, we're going to see the price of commodities increase, which means from a pure dollar perspective, these companies are more profitable. I am filming this today on June 18th, and we are seeing a larger than normal decline in the overall stock market, and you can see how a lot of that is in the red today. But what we're going to be looking on is I'm going to dive here into materials. Again, I'm utilizing TD Ameritrade's website to do a lot of this research and walk through this information. What we're going to be looking on are the industries within the sector, primarily focused on the mining sector. One of the key things I would initially highlight whenever we look at these new investment theses is look at the historical price to earnings ratios associated with these companies. Because right now, precious metals, generally speaking, historically have not been as high as we're seeing them right now. So you can already see a number of companies that are on this list that we've looked at historically. Vail being a very popular mining company, and then the one that I want to talk about today, Barrick Gold. This is the one that Jay Trades asked about. So Jay Trades, if you're watching, then want to let you know that we are going over this today. So what I'm going to look at here is actually go into the company and talk about why I think that this has a good investment thesis as a hedge against inflation, but also as a buy and hold. Again, to reiterate, kind of from a historical perspective, when we look at the PE ratio, or the price to earnings ratio, this is showcasing the price of the stock as it relates to the actual earnings associated with the company, which you can look at the trailing 12 months earnings here. So what you see here is just a quarterly basis. What we'd look at from an annual perspective is really what we're kind of focusing on here. So when we're looking at Barrick Gold, who has gold mines really in a lot of different places, they peaked last year, but you can see that the company has really kind of traded in these various upper, high-end, and low-end trend lines. And now that we've come off that high-end trend line, the company has not necessarily made huge increases in their overall income, although they've continued to do very well. You can see that, again, they've stayed very consistent. Even from a net income perspective, we don't have a lot of dramatic changes in the total net income from really the prior quarters from what we're seeing now, especially if we look at this on an annual basis. You can see that the company has continued to maintain very strong profitability, albeit we're not seeing these crazy changes. Again, a lot of this is dependent on the price of gold at a given point in time, because they're the ones going out and mining it, and the cost is not necessarily changing too much to pull it out of the ground, but rather the way that the company makes a lot of money is when the price of gold goes up. So when we're looking at this, some of the things that I do like about the company is right now the dividend is about a 1.71%, which is very attractive as a hedge, because again, you're looking at this, and I don't really encourage someone to have more than anywhere from 5 to 10% of their portfolio in a hedge type of position, whether that is in a cryptocurrency fashion, if that's what you're a fan of, or in a position such as a precious metals. So this is an advantage to being able to hold something like this, is you know that the company historically you're not going to have huge swings on a daily basis, but this company does have the capability to have a lot of upside, at which point if the company skyrockets back to $30 a share, I would be selling that. And I don't own a position in Barrick Gold today, but this is one of the ones that I would be evaluating in the precious metal space. Again, I'm also involved in MP, but that's more of a growth play. But some of the key things that's nice about like a gold hedge is because historically speaking, gold has done very well in high inflationary environments. And if you believe that the United States is going to be in a high inflationary environment, then it's expected that the price of gold will go up and the miners will do so as well. And the example that you see here on the screen, though, as again, we have some of these returns going up and down over the past 3 months, you have the capability to swing trade it, or what rather I would be looking at is really evaluating, does it make sense for us to continue purchasing the stock or just have it and receive a dividend? From an options perspective, because we do like to talk about that on the channel as well, I do want to highlight that there is a lot of different ways that you can play this, but if you want to have the options approach to it, I would really be evaluating it more from a near the money type of play. So you can see that right now priced into it from the $20 call option, or we'll look at the $21 call option, which is just close to being in the money right now, or is in the money, with the bid ask of $21 and $21.08, $21.09. So right close to that money. You can pay right at 5% of the total stock price to get a hedge for that $21 call. And I think that there's a lot of value in buying the 21 and selling the 22 if you're looking to play it near the money. Keep in mind that this, traditionally speaking, is not a huge mover. So that's just some of the information that I'm going to be looking at and evaluating going forward, is do I want to go ahead and start moving a portion of my hedge portfolio into gold miner in particular, not necessarily straight up gold. And I like a lot of what Barrick has to offer in terms of they have that consistent income approach. So keep in mind all of this, I am by no means a financial professional, and you should just take my opinion as that, an opinion. But if you like those opinions, then feel free to check out my newsletter down in the description below at Substack. I am going to be putting out information there on a weekly basis, and that's free to sign up and to view, free to join the Discord, and free to leave a like and subscribe. So if you found this content helpful, please consider doing so. Thanks. Talk to you later.